Analyzing binary code prices on the exchange data analysis introduction. Do you remember how in the Matrix Neo saw the world as a green binary code? But what if you look at exchange charts that way? In my daily trading, I have often wondered, is it possible to hear what the market is trying to tell us if we imagine its movements as a kind of code or language? The idea came unexpectedly while analyzing the Bitcoin chart. Watching surges and slumps of the price, I noticed that certain combinations of movements are repeated, like letters in words. This made me think, what if we encode these movements in binary format and try to read the resulting message? Does it sound insane? Maybe. But remember, isn't technical analysis based on the search for patterns? Aren't candlesticks the same coding system for price movements? After all, the market itself is a huge stream of information encoded digitally. In this article, I want to share my experiment on turning price movements into meaningful binary code sequences. We will look at how one can convert various aspects of market behavior from simple price movements to complex patterns into binary format and try to find patterns in this code that will help us better understand the language of the market. Yes, this is an unconventional approach. But isn't that what trading is all about, looking for new ways to see what others are missing? Let us dive down the rabbit hole together and see where it leads us. The concept of representing price movements as a binary code. My approach is based on a simple but intriguing idea. Any price movement can be represented as a sequence of zeros and ones. Think about it, when we look at the chart, what do we see? Growth and decline, strong and weak movements, volumes above or below the average. In fact, we are already unknowingly converting this information into a binary format in our head. Here is a simple example. Let us say we see 3 candles in a row, a rising one, a falling one, and one rising again. In the most primitive representation, this can be encoded as 101. But what if we add more parameters? For example, should we take into account the strength of the movement, the trading volume, or the position relative to the moving average? In my experiments, I have found that even basic coding based on the rise-fall principle can produce interesting results. However, the real magic begins when we start taking into account multiple timeframes. Imagine, the same sequence of 101 on an hourly chart may look completely different on a daily or weekly timeframe. This creates a kind of data matrix where each price movement is described by a unique binary sequence. Particularly interesting results are obtained when analyzing cryptocurrencies. Bitcoin's volatility creates clear, well-defined patterns in binary representation. Sometimes it seems that these sequences are similar to Morse